Hello friends, in the series on the income tax cases, today we will discuss a very different type of issue in which the question before the Honorable ITAT Bangalore A bench was that if the amount written by the assessee in form 10 which was filed before filing the income tax return and the amount which is mentioned in computation of income and has been filed with the return of income is different, then in that case what amount should be considered for the purpose of section 11 subsection 2. This matter has been decided by Bangalore ITAT A bench in the case of Vaidic, Dharma, Sansthan versus Deputy Commissioner of Income Tax Exemptions, and this case has been reported in 113 ITR Tribunal Short Notes 1. The date of the judgment is 18th June 2024. In the present case, the assessee is a public charitable trust engaged in providing religious and spiritual education to the public at large. The assessee for the assessment year 13-14 filed a form 10 on a tentative basis which was supported by the resolution of the Board of Trustees in which an amount of rupees 4 crore was accumulated. If we calculate the 5 years from the assessment year 13-14, then according to this form, in up to the assessment year 18-19, this 4 crore should be expended. But in the assessment year 18-19, only 3.13 crore amount was utilized. So the assessing officer, relying solely on the form 10, added the difference between 4 crore and 3.13 crore as the amount unutilized by the assessee in the assessment year 18-19. The plea of the assessee was that the amount accumulated as per computation of income, return of income and audited accounts was 3.13 crore which has been utilized in assessment year 18-19, but the assessing officer was not convinced with this proposition. CIT appeal also upheld the order of the assessing officer, and when this matter was heard by the tribunal said that the amount accumulated in form 10 was 4 crore which was on a tentative basis, and the amount accumulated as per the balance sheet, ITR and computation of income was 3.13 crore. So in the present case, actually the amount accumulated and available for expending in the assessment year 18-19 was 3.13 crore. So in any case, the assessee cannot expend rupees 4 crore simply because the assessee has mentioned an amount in form 10 which was filed before the computation of income or which was filed before filing the income tax return. The addition of the assessee cannot be made, but at the same time the tribunal said that in the present case the assessee has not filed the computation of income, ITR and balance sheet before the lower authorities, but that were available with the assessing authorities. So in the fair play of justice, the matter should be remanded back to the assessing officer for re-adjudication, and if he finds that the amount accumulated is 3.13 crore as per the audited accounts, then according to that the assessment should be done. So from this case it is very clear that the amount which is actually accumulated should be considered for doing the assessment of the assessee. The second issue in the case that the amount of surplus in the non-corpus fund was 42.12 crore and the amount invested under section 11 subsection 5 investments was 26.41 crore. The assessing officer blindly made the difference of the two amount as that these amount since has not been invested in the investments mentioned under section 11 subsection 5, so he made the addition under section 13 subsection 1 clause D. When this matter was heard by the tribunal said that in the present case the difference was invested in fixed assets, in capital work in progress, in current assets. So that amount was actually applied by the assessee for the purpose of the charitable purposes. So that amount was not actually available with the assessee for investment in section 11 subsection 5. So in the present case the 11 subsection 5 investment should be seen by deducting the amount which has been applied for the charitable purposes. For example, in this case, in the fixed assets, capital work in progress and current assets. So on both the grounds, the relief was granted to the assessee in the present decision. At the end of this video, once again I am repeating the name of the case. The name of the case is Vaidic, Dharma, Sansthan versus Deputy Commissioner of Income Tax Exemptions, and this case has been reported in 113 ITR Tribunal, short notes 1. The matter has been decided by Bangalore ITAT A bench and the date of the judgment is 18th June 2024.